Hey guys, in this video, let's do something fun. We're going to talk about 10 earnings trades and how they could possibly wind up after they report earnings. Now, if you were a subscriber to our alerts, this is actually a program that you would be focusing on this week. These are the companies that are reporting earnings that we're looking to possibly trade. As you can see, there's quite a few stocks on this list. The idea is to look at the charts, be prepared for when these stocks are actually reporting earnings. As you know, we don't really take trades before the earnings, which actually offers a very low probability. But what we do is we take a closer look to understand what could be taking place next. So with that being said, I want to talk about 5 stocks. In the second video, we're going to pick 5 more that we're going to talk about. So here's the deal. We're going to talk about Apple, Microsoft, BABA, McDonald's, and AMD. I know, for whatever reason, everybody loves trading AMD. We actually strongly advise against it, and I'll give you reasons in just a second. But in this video, you guys look in the comments. If you will get the direction of each stock correctly, and approximate magnitude of the move, you will have a chance to win the free chart scores. Now, I know some of you on this channel, you guys been trying to save up and try to get the chart scores. So here's your chance to get it at no extra cost. All you have to do is put in the comments specifically, what do you think Apple is going to do after hours and tomorrow? What will Microsoft do tomorrow after earnings? What is Alibaba going to do? What is McDonald's going to do? And what is AMD going to do? If you get all 5 of these right, then we will give you a complimentary charts, patterns, and divergency scores. We'll deliver it to you straight to your email box. So you guys pay very close attention, because in the next few minutes, we will take a look at 5 of these stocks, and we will tell you specifically what we think is going to take place. Now, please don't expect us to get necessarily every single one of them correctly down to the point of where we predict the magnitude of the move, because clearly predicting the direction sometimes is easy. But to make money with options, it's 3 things that you need to know, right? It's always the direction, the magnitude of the move, and the timing. So the timing we don't have to worry about, because it's the earnings that's the catalyst. So we know the timing. The timing is, you know, for Apple, it's tonight after market closes. It's 4 o'clock. It's after hours. For some of the other stocks, it's going to be tomorrow. So let's talk about Apple first. After 10 consecutive gap downs, this is what we're observing. We're observing a pattern interrupt points to a gap up. So look at this. I've got these blue dots all over the place. Here's what these blue dots mean. In this particular case, Apple gaps down from 220, goes lower, another gap down, another gap. So basically, if you look at these history of gaps lower or gaps down on the way down, this is absolutely insane. It doesn't happen very often, but it certainly did in the case of Apple here. What is important to understand is the probability of another gap down at this point is highly unlikely. It does not mean that Apple, after it reports earnings here in just a few hours, it does not mean that it's not going to gap down, but ultimately we think Apple is going to go much higher. There's multiple things on this chart that actually point that Apple has a high probability of gapping higher from here. So as you can see, we've got the bullish divergence right here in the RSI. As you can see, Apple drops to this level right here, and the RSI is at this point, and it goes lower, but the RSI does not drop. So that tells us it's moving higher from here, and it certainly does. However, it's been trading in a sideways pattern. We also got bullish indicators pointing to a bullish move as far as the MACD, and we've got a double button accumulation distribution. Things are looking good as far as the daily chart. Now let's take a closer look. This is what's really been going on. Okay, so Apple stock has dropped from 230 to 141. Now so far it only moved roughly 9% off the lows, from 141 to about 154, 156, let's call it 155 range. That actually makes it a huge bargain in relation to stocks like Netflix, which is up 50% off December lows. Look at these situations from their relative perspective Apple actually represents an unbelievable deal considering the market conditions. And the market conditions as such, if you watched our previous video, we made a pretty serious bull case for the stocks long term over the course of the next 3 to 6 months to move higher. So we'll be proven today whether we are right or wrong, because Apple is going to be a good indication of whether the market is really going to move higher from here or not. What makes it a huge bargain also in relation to stocks like Netflix, well, clearly it's got the best balance sheet out of all the FANG stocks. So if we're looking, as far as how much cash Apple really has, and where it plays an important and crucial role is, in case of a recession. In case of a recession, you really want the company to not be leveraged. Companies like Netflix, they borrow so much money for the content. It's borrowed money that they financed this content with. Now, in case of Apple, they got a ton of cash. They can make any move in any kind of recession and take advantage of some tremendous opportunities, while some other companies, they may not be able to do so. So it's actually a good recession play in relation, on relative basis, tons of cash among all the FANG stock, and on top of everything, pays a dividend. Netflix don't pay you a dividend. A lot of other things that they don't pay you a dividend. So this is an awesome investment on relative case basis. Now, investors are clearly waiting for the green light to buy after the earnings. The fact that the stock has been moving just slightly higher to sideways actually indicates that investors are patiently waiting to make sure that this announcement is just not going to be much worse than what already been projected. As long as that's not the case, then we're all good. Green light. Apple is going to jump higher from here. So no matter if the numbers are bad, I think they still will buy the stock, because again, in relation to a lot of other technology companies, this represents a super killer deal. Now, even things like horrible guidance from NVIDIA today could make Apple guidance look like a great deal. So it's actually it could be making Apple appear like a deal of a lifetime compared to other technology stocks out there. By the way, NVIDIA drop today was bought by institutions in huge volume, reflected in a bullish accumulation divergence basically pointing to a bottom. Now, set up for bounce. Apple weekly chart is showing that after a huge drop, generally what we will see is the stock is not likely to continue moving lower short term in the same type of magnitude. So when you have something dropping from 230 to 138, it's unlikely to continue moving lower in such a direction within a short time frame. So what we are looking at is a probability of Apple bouncing is significantly higher than the probability of Apple actually falling lower from here. We got a situation developing here, which is actually quite bullish on the MACD. We got black line looking like it's ready to move higher. And the histogram here of the blue bar shows us that this direction is very close to change. Accumulation distribution confirms that. So very bullish chart. And notice when Apple is falling lately in the last few days, it's fallen on a very tiny volume. So consider this level of 155, 156 to be a buying opportunity. We're actually observing a lot of institutional investors coming in and buying the stock here. So this is how Apple chart looks now, guys. So roughly 155. So it kept dropping from here all the way to here. Last gap down. Now it's moving sideways. So around 155. So take a look at this. This is how Apple chart looks now. This is what we think Apple chart is going to look like very soon. So expect when you analyze Apple chart in the next couple of months, it should look like this. After today, you should be observing this. This green dot right here represents a gap up from today's level, which is January 29th. And we're saying tomorrow Apple is going to go and open significantly higher. Now, after market hours, clearly it could just actually give back a little bit and then move higher. It could just make a straight move higher. But notice the importance of this chart also pointing that after the move higher, as you can see in this chart, and I'm just using this chart as an example, right? So look at the gap down, gap down, gap down. Apple's got 10 gaps down at this point, and we're looking for this reversal to come in today. January 29th. So we're looking for a reversal of this gap down pattern in Apple. We think it's actually going to gap up higher between today and tomorrow, January the 30th. Apple stock will open higher, and we're looking at about a range of 165 to possibly 175 level. Notice this is not a huge range of moving higher, but ultimately what this chart is pointing to is the fact that after Apple gaps up higher, it's going to keep moving its way higher, but not in a solid like 1 or 2 day move higher. It's going to kind of move higher, give up some of the gains, and then slowly grinding its way higher from here. So this is how the Apple chart is going to look. So what are we really saying? Apple, from today's price, roughly 155. Near term is going to go to 165, 175. What we're thinking is, after it announces earnings today, look, the iPhone sales, are they important? Sure. But I think after today's numbers, no matter how bad they're going to be, the focus is going to start shifting to what is coming next. And the next two areas for Apple stock to grow is the services and the healthcare. And I think Apple is going to mention some things on the earnings call today that will make some investors incredibly bullish about the stock. So therefore, we think Apple will move higher on the possibilities of what could be coming as a huge growth area in healthcare and services for the stock. Let's take a look at the next one. Now, here's a tricky one. Guys, this one is tricky. Let me ask you a question, and hopefully you've been paying attention to some earnings in the past. Why is Alibaba reporting news this Wednesday, meaning tomorrow? Why would it do that? Now, if you haven't been following the history of Alibaba, you may not know that it typically reports earnings during week 6 of earnings season. Right now, we're actually on week 3 of the earnings season. That means it's going to be reporting earnings 3 weeks prior to where it typically would report them. So, and another thing to observe is Alibaba typically reports earnings on Friday morning, in instances Thursday. So what is going on here? Typically, the behavior of the stock is such that it typically jumps pre-market followed by intraday sell-off to the lows. This is what we think is looking suspicious. What's the big deal, you may think? Well, it reports 3 weeks earlier, number one, and coincidentally or not, it reports the day which coincides with Chinese coming to the White House to talk about the trade deal. Surprise or not, we're fixing to find out. It is also reporting the morning after Apple reports earnings. Maybe we actually will have some good news coming out of China, as previously stated in the earnings call of 3M. They actually don't see things of the China impact hurting their business as much. So maybe all of this stuff has been overdone, and that could be a good reason for investors to come in and actually buy this stock. So listening to what's been going on with 3M, listening to what's been going on with a lot of things that have been priced in, all the negativity, we may actually have a bull ready to launch here. Charts point to a bull in Alibaba. Let's take a look. We got a W-shaped formation at the bottom here. We got a gap up, another gap up higher. We've got a divergence on the RSI. Everything points to the fact that the stock could easily test the level of 168, 169. Very bullish on MACD. Accumulation distribution is trying to pick itself up here. Weekly chart confirms the bull in Alibaba. So we've got the divergence confirmed here as the stock goes lower, RSI goes higher. Boom. Really nice volume over the last few days. And when it does try to fall, the volume is pretty much nothing. So it falls in low volume, goes higher and higher volume in relation as far as, making observations for the last week or two. So looks really good. Accumulation looks like it's making higher highs. Really good stuff right here. We just crossed and made a bullish crossover in the MACD on the weekly. Guys, long term, it looks like a really good deal. It looks to me like the money is going into Alibaba stock overall. after the report tomorrow morning, the stock could actually quickly sell off to 155, 152 at the pre-market hour, followed by 2 or 3 days higher. So we're looking at a target of about 165 to 171. Don't expect huge moves after initial drop. It could certainly move maybe 5, 6, 7 bucks to the upside, but ultimately will grind its way higher within that range right here, 165, 171. As you notice, this is exactly the opposite of what the stock has been typically doing. So if you see Alibaba drop after the earnings announcement, actually it would pay to be a bull rather than a bear here. So that's what our thoughts are on Alibaba. Microsoft, death cross. That will not cross. Check this out. Take a look at this chart, guys. Wow. That certainly looks like the blue line is about to cross the orange line. But if you watch some of our videos, what do we talk? We talk about making sure that you don't look at just any one particular time frame on the chart. As a matter of fact, we advise strongly that a trader would consider looking at the 1 day, 1 minute, 5 day, 15-minute chart, daily chart, which would basically, as you can see, this is a daily chart, gives you a overall perspective of where the stock's been and where it's headed over the last roughly 6 months. And the weekly chart will even give you a more well-rounded view overall of where the stock could be going and what's going on with it. So it looks like we got a bear here on Microsoft, but maybe not so fast. So let's look. We got bullish divergence here. We got nice accumulation distribution going on right there. We got really nice RSI development. So everything's actually pointing to the fact that we got a really nice strong support line here, off of which I think Microsoft is going to take off after earnings. Now, top performer in tech in the mini crash of December 2010, guess who it was? Yes, it was Microsoft. And while a lot of stocks were dropping like crazy, as you can see, this pattern of candles, like surprisingly, they all look pretty much identical, right? And never mind that this one is like a white and black candle here, and this one is red. Look at the formation of these candles. Incredible. Every time Microsoft drops, what do? They come in and they buy, and they keep doing that. And now it is above the blue line. So while a lot of other stocks, like let's say even Amazon, dropped all the way to the orange line, which is a 200-day moving average, Microsoft showed incredible strength in relation to other technology stocks. Very important. Even though we saw a death cross formation on the daily chart, there is no death cross on the weekly. Do you see that it trades very much above the blue line, with the exception of just a couple of days? So once it dips under the blue line, we see buyers keep coming in and scooping up the stock. Very important observation the last couple of days. Look this sell-off volume. Yeah, it looks like it's dropping, minus a couple of bucks, which is kind of a decent move for Microsoft, but it's not falling overall because it's fallen on low volume. So not many people are willing to sell it at these levels, which tells us after the earnings report, it could go significantly higher, which is confirmed by the RSI direction here. Very bullish observation made on the MCD that's moving higher. Accumulation distribution. There's like a lot of things pointing that Microsoft will be moving higher. And clearly it is above the blue, which confirms a really nice uptrend for Microsoft, regardless of all the crazy stuff that we've been through in October and December 2018. And speaking of the blue, the big blue is the real reason Microsoft is going higher. So here's what we mean by that. Here's my attempt to draw a cloud right here. Imagine if this is Earth or the ground. In the case of IBM, the big blue, then this move right here sends us from planet Earth to the clouds right here. So it moves from 122 to 134, 135 range. Huge gap up. Now, why does it do it? As you know, if you've been following IBM, horrible quarters, consistently reduction in revenues, this and that. But why does it move finally higher? Well, because it finally reports incredible revenue growth in the cloud area. And so most or a great part of the business in Microsoft now derives from the cloud. So if IBM can rally and it's a cloud stock, I think the news is going to be very positive for Microsoft, and we're looking for Microsoft to go higher because of the amount of business it does in the cloud as well. So we're expecting really good numbers for the cloud component of Microsoft business, and therefore we're expecting similar action in Microsoft. Now, Microsoft does not maybe move quite as much as IBM, but overall we are expecting it to go higher. Now, observe, if we look at these IBM chart, gap down, gap down, gap down, and we think this action is actually resembles what also Apple stock is going to do after earnings. So the big blue IBM tells us the story of what's actually going to take place to Microsoft shares after hours. So we're expecting to move to maybe 110, 112. Currently it's trading around 105 range. Not necessarily in one move, right? It could be a series of moves, smaller moves, like meaning it could move up a few dollars higher on one day and a few dollars higher, ultimately hitting this range of 110 to 112, possibly breaking out above that. Okay, next, McDonald's. Is it time to take profits on McDonald's? Looks like a classic top scenario right here. McDonald's hits 190 right here. The RSI is at this level, hits very close level of 189 and some change here. The RSI is significantly lower. Tells us people are wanting to take profits here. We don't see that the buyers overwhelm the sellers. We actually see exactly the opposite of that. MACD is pointing to a bearish reversal here. And we're noticing the same thing developing on the accumulation as we see on the RSI. There's just not as many market participants wanting to put their money to work here. Well, surprise, maybe it's because there's plenty of other deals like Apple out there that they may be looking at instead of buying McDonald's at all-time highs. So smooth sailing for domestic restaurant stocks should not be ignored. You know, over the course of the last few months, while the market was dropping, a lot of stocks like CMG just kept going higher and higher. What we are noticing here, we've had multiple upgrades in the stock. One of the analysts recently upgrading the stock to a level above 600. The stock did move higher in that news, but looks like we do have number of institutional sellers coming in and taking profits at this level, which shouldn't be very hard to do if they were buying it right here at a level of 390 to 420. The stock would be $100 higher, representing roughly a 20% gain, literally in a matter of weeks. So we shouldn't be surprised that there's some profit-taking activities that we're observing on this chart. MACD is turning bearish. Double top on accumulation distribution tells us that, hey, possibly the same thing would apply to McDonald's, although it does a lot of business internationally. But we're observing the same thing, double top right here, divergence, bearish divergence in this case on the RSI. Bearish reversal candle is what BRC stands for. Bearish reversal candle, as you can see, the last time we had one of these candle formations that was quite distinguished on this chart. The stock made multiple days lower. The same observation we're making right now, we think it will go lower, ultimately testing this level 170, 175. Notice, very important on this, when we're looking at the MACD on McDonald's, last time MACD tracked really closely between the black line and the orange line. Ultimately, we got a break lower, and this time we're having the same situation, so I think we're going to have a break lower one more time, just as it happened right here. Okay, what do we see from McDonald's? There are clear signs of institutional selling into earnings announcement. Slight downside possible, high probability of sideways trend, basically targeting the range of 175 to 182 near term. And last but not the least, guys, AMD. Now, I'm doing this one just for fun because for some reason, every time someone reaches out to me to try to learn more about trading, we'll ask them, hey, well, give me an example of a recent stock you traded. Guess what they say? Well, AMD. Guys, look, we do not trade AMD, but I'll share my thoughts. And there's a number of reasons why we don't trade. Certain stocks are just not good stocks for trading options. In other words, applying the same theory behind the AMD, you could do substantially better trading some other stocks. Generally, there are going to be stocks with higher daily trading range. If you'd like to learn more about that, certainly click the links below, schedule a 20-minute coaching session, get all your questions answered, why you could do substantially better than trading AMD. So not all stocks are actually best for trading options. It's important to distinguish which ones could provide you with the best results. We will speak about the direction of AMD that could take place, and just share all the thoughts briefly. Now, similar condition with the chart of Microsoft. As you can see, it looks like the blue line gets very close to the orange line, but every time it does, this actually is not telling us that there's going to be a death cross, meaning we can actually get a bounce off of this resistance level of about 1920. As you can see, these bullish reversal candles that are forming right here telling us that every time the stock gets to around 18, 19, 20, they keep buying this thing. So accumulation distribution confirms it. MACD looks bullish as well. We're actually looking at some really good qualities that would make the stock go higher from here. AMD on weekly actually confirms it. We got a double bottom right here. You know, stock is falling today going into earnings, which is pretty nice setup. That sets us up for a decent bounce. Double button on the accumulation distribution, and MACD is pointing to a move higher as well. So overall, what do we think? We think AMD could actually move slightly higher to sideways from here. Now, as with most of the lower price stocks like $10, $20, $30 stocks, we're not expecting a huge move. So currently, at the time we're recording this video, it's trading around 19.5, 19.7 range. We are expecting a probability of it moving to 21.5, 22.5 over the course of the next 48 hours. Guys, with that, I thank you for watching the video. Please share your comments below about the direction where these 5 stocks could be going. If you get them right, you will get the charts and divergences course 100% complimentary as a winner of this short-term trading competition contest. So share your comments. I hope you will win. Let's do this, guys. Let's have an awesome trading week. I'll catch you in the next video.